Your bank. Yes, your banking institution, your insurance company, your stockbroking firms, and other financial institutions that you rely on and do transactions with now have other reporting obligations that you may not have been aware of. And that's what we're going to be talking about today. What are those other reporting obligations that your bank your financial institutions, other financial institutions, fintech companies, your stockbroking firms, your insurance companies, that they have that may be of interest to the tax authorities. Oladejo Adeyemi is my name. I'm your foremost business coach that designates his time to reading the tax laws so that you don't have to spend the same time doing the same. Let's take a deep dive. Section 29 of the Nigeria Tax Administration Act places reporting obligation on these categories of companies that I've mentioned. And the reporting obligation is such that it forms a huge database for the tax authorities to be able to independently verify some of your economic activities as a business and as an individual. This is where it gets interesting because the threshold that has been specified by the law is such that you have to be aware of so that you can very well know that your transactions are no longer going to be distant from what you report for tax purposes. This is particularly important because remember that we practice self-assessment in Nigeria. So an entity, an individual is required to report its income or his income and the details of his transaction for any particular year. Now, as you do that, this provision places another burden or obligation on the banks, insurance companies, stockbroking firms, other financial institutions, fintech companies that are involved in one financial transaction or the other to annually report transactions where, for instance, an individual has had cumulative transaction of up to 50 million in any month. And for a corporate, any corporate that has cumulative transactions of up to 250 million. So these annual returns would contain many information about such transaction and the entity, the names, the addresses, the details of the transaction, whatever it is. All of this information will be contained in the annual reporting that will be done by those banks and those qualifying institutions. I've mentioned the entities that are affected, the banks. Some of us believe that, I'm not going to do certain transaction with some banks. I'm going to use certain banks. The banks that I'm talking about. Those ones that you can just quickly use your phone number and just the bank account details would double as your phone number. And you believe that when you do that, you are operating under some sort of shadow economy. Not anymore, because this provision now places a reporting obligation and burden on all financial institutions to the extent of the limit that I have mentioned. You can liken this to the effort of the government to further broaden the base of getting information. And with where the world is going today, where information gathering and information collection is very critical to tax administration, one can only wonder why Nigeria as a country, is beginning to take these steps. Anyone who is still wondering why, it means they have not been following this channel. So I've mentioned the threshold. This would curtail increased participation in the shadow economy where transactions are actually going on, but what you are reporting for tax purposes, it's completely different from what the real or the actual, transactions were. What are then the potential risk and concerns that could actually emanate from this provision? Some people have talked about privacy issues, that, oh, does that mean my bank is going to be disclosing any of my information? There is actually a provision in the law that forbids the banks and other financial institutions from just responding to any such requests, particularly where there's a specialized request, if such request is not signed by the chief executive officer of the tax authority. So that kind of protects the rights of the taxpayer in that regard, such that not every Tom, Dick, and Harry can just approach the bank and make, request of the names or request of the details of the transactions that you've made. But remember that this is different from the obligation that is placed on the banks and other financial institutions, insurance companies, stockbroking firms for reporting certain transactions that meet up with the threshold that have discussed. This initiative is also not standing alone. It's not a standalone initiative in Nigeria. If you are used to such initiatives that exist in other jurisdictions, then FATCA, for instance, should not be new to you. You also have the OECD transparency framework, where certain disclosure requirements are required by participating jurisdictions. The real question really is my banking activity consistent with my tax filing? Those are the questions you should be asking now. What you are saying in your tax filing, are they consistent with your banking activities? Are there businesses that are not properly documenting, their revenue? These are times where the FRS, did I say the FRS? The NRS. It shows you have been following this channel. The NRS and other state tax authorities can now have huge amount of data to compare with whatever disclosure that you have made. In the days that we are now, the tax authority may no longer solely rely on whatever taxpayers have declared. You now have this provision which enables bank and financial institutions to become major players in Nigeria tax enforcement system. And you don't want to find yourself in the wrong side of the divide. Till I come your way again, keep sharing, keep liking, keep engaging. Ensure that you make it a point of duty to educate our business community such that we all remain compliant and we take the best out of the provisions of the enabling laws. Bye for now.